Now we'll be having our weekly energy update with Dan McTeague, Senior Petroleum Analyst at Gaswizard.ca. Take it away, Dan.
Well, thank you, Nima. It's been a constant refrain over the past few weeks that we're not going to see much in the way of any upside moves for gasoline or for diesel or energy prices. You might have got a glimpse of that earlier this week when we saw energy prices picking up 5, 6, $7 a barrel and gasoline going up 5 or 6 cents a liter. But again, U.S. Fed, central bankers around the world committed to fighting inflation. It's pretty clear that the markets are panicky. They believe that central banks are, in fact, wishing to crash the global economies in order to gain their ultimate goal of reducing inflation. A lot goes into that, but in Canada, it isn't lost on folks like myself who spend a bit of time looking at things like carbon taxes, not just the first one, which will increase by about 3.5 cents a liter come April 1st, but the beginning of the second carbon tax, the clean fuel standard, which could add beginning of, this year or the next year as much as 4 cents a liter. Any way you slice it, that's higher than the guidance and the advice of the central bank, the Bank of Canada, that wants inflation between 1% and 3%. So if you're going to meddle with that energy, diesel, gasoline, the transport fuels, and you're going to drive them to a much higher level than the inflationary guidance or suggested move by the Bank of Canada, then you're dealing with a never-ending battle. Inflation driven by energy driving up inflation, and of course driving up interest rates. I think politicians are going to have to spend a bit more time on that. In the meantime, though, we're seeing record low prices. Vancouver, for instance, down to $1.60 for a liter of gasoline, something we haven't seen since the beginning of December 2021. Over in Alberta, with the lack of or the removal of the provincial tax, $1.25 seems to be the new number that is bandied about. We haven't seen that since October of 2021. Saskatchewan's seen prices down too, although they still have the provincial tax, but still at $1.40, $1.39, $1.37, a pretty good deal. Unfortunately for Manitoba, we're still seeing sticky prices. Gas stations in places like Winnipeg are still $1.52. It's costing those stations no more than $1.20 to $1.25 to buy their fuel, so they're picking up 25 net cents a retail margin. I haven't had many people call me on that in Manitoba. It looks like they're pretty happy with gas stations making like bandits. But I'm sure as a result of this, Nima will probably get a few people calling us. Ontario, look for a continuation of prices for gasoline, at least remaining in the mid to high $30s for the next week or so. Quebec, 15 cents, 16 cents a liter more. That's a differential in taxes, so low $50s. And of course, the Maritimes, who have seen a bit of a decrease in prices, could see that accelerate to the upside next week. Upside, I mean a greater decrease in the price of gasoline. We could be seeing a 5-cent decrease come next week. The big issue, however, is diesel. It isn't moving. And where it is moving, it's certainly not moving in the right direction. Although in Atlantic Canada, they saw an 11-cent decrease, much that not due to diesel prices, but their regulatory bodies there tend to attach diesel to the price of kerosene, stuff used for jet fuel and for furnace oil, but not used for diesel. But I'll let them figure that one out. There was a big surprise decrease of 11 cents a liter. Don't hold on to that forever. As colder weather starts to hit northern hemisphere here in Canada, look for diesel prices and furnace oil prices to go up much higher. And even if they start to come down at the end of the winter, which we haven't really quite seen yet in eastern parts of Canada, when they do come down, the federal government will be there to make sure that they are supported, pushed back up by their favorite taxes, not just the first carbon tax, but as I mentioned earlier, the second carbon tax, which we've been talking about for a very, very long time. Go to affordableenergy.ca. You'll see some of the work that we've done, going back studies as well that support the notion that Canada's going about this the wrong way. It's not lost on folks like myself that when the world is looking to cap Russian oil as a means of trying to, remove the finances from Russia, that at the end of the day, you're actually encouraging investors and others to go elsewhere. That's not going to stop Russia from selling oil. It may turn around with OPEC and decide to cut oil production, which I believe they are going to do at the beginning of January. So these things, artificially imposing mandates, green mandates, and other things on the markets only tends to create greater distortions and ultimately higher prices for consumers. So as we set ourselves for the Christmas holiday and get ready to look at these prices, yes, they're a bargain today. This is probably as good as it gets. But going into early parts of 2023, especially the second or third week of January, Nima, look for those prices to go back up. But we'll be right here to give you that information and that update.